While the Reserve Bank has hiked rates, it is not at the higher pace of earlier increases. Economists say this could be a sign that South Africa is nearing the end of the interest rate hiking cycle. This as inflation is slowing. The central bank expects consumer inflation to average 5.4% this year, down from 6.9% last year. Reserve Bank Governor Lesita Kganyago says there are upside risks to the inflation outlook, mainly from the impact of the continued Russia war in Ukraine, electricity and other administered prices, and oil prices. Load shedding is also expected to add to price pressures. Kganyago says the rolling blackouts are expected to shave off 2 percentage points from this year's economic growth. The central bank expects the local economy to grow at 0.3% this year.
Load shedding would have shaved off the growth of 2023 2%. So when we have growth of 0.3%, give or take, we think that growth could have easily have been 2.3% during the course of this year, and that load shedding had actually shaved that off. But load shedding is not just impacting growth, which is the conundrum, or the dilemma that South Africa faces. That it also, we believe, has got price effects. It has price effects in the sense that businesses and households have to try and find alternative energy. That might be positive for investment, but raises the cost of doing business and raises the cost of living for households.
Economist Johan L. says times are hard for consumers, but the slowing inflation should reduce some pressures that consumers are facing.
I think that lower inflation will be of some benefit to consumers. I know that there's lots of pressure around electricity price increases, etc. But again, lower inflation this year compared to much higher inflation last year. And even though interest rates are high, they just a little bit above what they were pre-COVID. So overall, for consumers, I think maybe this year might turn out to be not as bad as many people fear. Certainly not great.
If you're paying off a mortgage of 1 million rand at prime lending rate over a period of 20 years, the 25 basis points increase will mean your repayments will increase by about 168 rand per month. Gloria Sefako Mosi, SABC News, Johannesburg.